One morning you wake up and turn on the TV. As you flip through the channels, a headline catches your eye. Banks are closed. You grab your phone to check your balance, but the app fails. The ATMs nearby display a huge sign. Out of service. Stores are open, but no one accepts your card. At gas stations, only cash is accepted. You have rent and bills to pay, but your landlord refuses bank transfers. At first, you dismiss it as a temporary glitch, trying to stay calm. But as you look around the streets, you notice people lining up in front of closed bank branches, anxious, tense, angry. Supermarkets are full, yet everyone is paying with crumpled, improvised bills because credit cards no longer work. The TV announces, "Financial system under emergency review." And suddenly you realize your money isn't truly yours. The numbers you see on the screen are nothing but an illusion. Then the screen goes black. It sounds like the beginning of a dystopian novel, but unfortunately it isn't fiction. Events like this have happened before, and not in some distant, underdeveloped, unstable country. Even in modern nations we consider safe. When it happens, life doesn't slow down gently. Everything turns upside down immediately. Remember Argentina in 2001. Years of poor economic management, debt, and AMF packages had piled up. People rushed to convert pesos into dollars, and banks suffered rapid losses. What did the government do? It closed the banks. They called it corralito, meaning small enclosure. For ordinary Argentinians, it was a cage. Cash withdrawals were limited to 250 pesos per week. Dollar accounts were forcibly converted into pesos at a massive loss. In just weeks, savings for homes, work, or retirement lost half their value. People protested in the streets with pots and pans. Middle-class families who thought they were secure suddenly found themselves in chaos. When banks close, this is exactly what happens. Money disappears. Not in abstract numbers, but in the basic necessities you can no longer access. Bread, milk, rent. Argentina is not the only example. In 2013, Cyprus, under a European Union bailout, forced banks to freeze accounts. Ordinary depositors discovered that amounts over 100,000 euros had been confiscated. The ones hit hardest were not billionaires, but businesses struggling to pay employees, retirees, and parents trying to cover their children's school expenses. In 2019, years of corruption and economic collapse in Lebanon triggered capital controls. Banks limited withdrawals to a few $100s per month, regardless of account balances. Depositors went to banks with weapons, not paperwork. And in every case, the story is the same. The money you thought was yours belongs to them, and they can restrict access at will. Unfortunately, there is very little you can do about it. Even in the United States, where it could never happen, banks have closed. In 1933, during the Great Depression, President Roosevelt declared a nationwide 4-day bank holiday. People couldn't withdraw cash, businesses couldn't pay wages, and uncertainty gripped the country. Banks reopened only after government inspection, gradually restoring confidence. Imagine, the wealthiest nation in the world had to halt its banking system to prevent collapse. All these examples share one thing. Banks do not hold your money as you imagine. They operate on a fractional reserve system. Only a portion of the money you deposit remains in the vault. The rest is lent out, invested, or turned into credit. Your money is being used. If many people demand cash at once, the system fails. Governments usually protect banks, not individuals. Withdrawals are frozen, deposits lose value, and the system's mistakes are imposed on citizens. Now imagine this in your own city. What would you do? Would your cash last a week, a month? Could you pay your mortgage if your bank itself has a problem? Could you feed your family? This isn't paranoia. It's a wake-up call. The financial system is designed to protect itself, not you. Under stress, banks are not safe vaults. They are fragile machines. When trust breaks, money and power move beyond your control. From Argentina to Cyprus, Lebanon to the U.S., the nightmare scenarios we've seen are history, not fiction. History tends to repeat itself. Look at past crises. Banks don't collapse randomly. They collapse by design. Fractional reserve banking is both a genius and a vulnerability. Deposit $1,000 and maybe only 50 stays in the vault. The rest is lent. That loan becomes another deposit and is lent again. The system grows and turns into a cycle, but it is like a house of cards. If too many people demand the original $1,000, it simply isn't there. Trust is everything. The system functions only as long as the public believes the doors remain open. Once trust erodes, panic begins. If everyone demands cash, reserves run out. Panic spreads. Solvent banks can fail. It's like a fire in a crowded theater. One scream, one rush, and survival becomes a stampede. Governments know this. That's why they protect banks, not individuals, during crises. Argentina imposed the corralito. Cyprus implemented a bail-in. And Roosevelt in the U.S. bought time to prevent collapse. The truth: banks and governments are inseparable. Banks need the government to guarantee deposits and maintain trust. Governments need banks to collect debts, fund deficits, and channel credit into the economy. When stress arrives, they act together. In the worst-case scenario, it's the people who suffer. Deposit insurance may seem like security. In the U.S., the FDIC guarantees accounts up to $250,000. But what if everyone rushed to withdraw at once? There wouldn't be enough. Insurance funds cover only a fraction of deposits. Their real power is psychological, to keep you calm and under control. When banks close, commerce grinds to a halt. Digital payments vanish. Salaries are delayed. In Lebanon, factories couldn't import raw materials due to frozen dollar transfers. In Greece, 2015, people waited hours at ATMs for just 60 euros. Weddings postponed, surgeries delayed, children missed school. The financial system redefines money from a right into a privilege. Even in the era of smartphones, crypto, and fintech, this problem persists, sometimes worse. Digitalization increases our reliance on banks and centralized systems. If a server fails, a card reader stops, or an account freezes, wealth instantly turns into meaningless numbers. In a cash-based society, a bank shutdown is no longer just an old fear, it's a modern nightmare. Consider the ripple effect. Businesses can't pay employees. Layoffs spread. Supermarkets can't pay suppliers. Shelves empty. Investors panic. Assets sell off at fire sale prices. Retirement accounts vanish. Governments try to restore trust, but queues grow daily, and patience wears thin. A technical decision escalates into full-blown social crisis. As the crisis prolongs, people become desperate. Barter, hoarding, and even uprisings emerge. This is not theoretical. It has happened worldwide, so why not again? If you think it couldn't happen in the US, UK, or Germany, remember Argentina 2000, Greece 2010, Lebanon 2018. Stability is an illusion until it disappears. Remember, Banks exist to protect themselves and the system, not you. When stress arrives, you are sacrificed. That is how the system works. Thinking otherwise is dangerous. Imagine waking up tomorrow to find your bank's website down, your card declined, and your salary delayed. What if it lasts weeks? Do you have cash? Can your employer pay you? Banks are not neutral vaults. They are the heart of the economy. Lessons from past crises aren't dusty history. They are warnings. In 2001, Argentina's anger spilled into the streets. In 2013, Cyprus's middle class saw their savings vanish. In Lebanon, collapse erased citizenship's meaning. All these stories point to one thing: don't confuse access with ownership. If your wealth depends on institutions' discretion, it isn't truly yours. Financial freedom means looking beyond the illusion of security and planning for when the system fails. Because one day, the question may not be, what if banks close tomorrow? But wow, what can I do now that they have? Remember, trusting a system you cannot control risks your most valuable treasure, your own future. So, ask yourself a simple question. Are you ready